Welcome to the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. This is the podcast that will make you a smarter investor and, dare I say, a better leader. Now, we normally tape this podcast 3 times a week from the beautiful NASDAQ flagship headquarters building right in the middle of Times Square. So we thought, why not take this to this great snowy Alps of the World Economic Forum in Davos, Switzerland, at the NASDAQ's home base here. Joining us now for this really special conversation at the World Economic Forum is Nouriel Roubini, professor at NYU and senior advisor at Hudson Bay Capital. Nouriel, good to see you. We've seen you around the world, and now we see you here at Davos.
Yeah, I just came from Israel and Dubai, and I'm headed from here to Mexico. So
you still look well rested. I mean, this is good stuff. There's so many different places we can start with you, but yeah. I just came back. You know, one of the cool things about WEF is there's breakfast. There's so many meetings on the ground. I came back from a tech breakfast, and we spent about an hour talking about the future of AI. There's entire departments of companies starting to be eviscerated. I mean, there is some real job loss. What are you hearing about the impact of AI? Last year, things were just starting, but this year, I'm getting a sense like, holy cow, like this is going to have a big impact.
Yes, one of the biggest topics being discussed during the WEF this year, like last year, is the one of AI. I was in a couple of panels discussing yesterday about what an implication AI for the future of jobs. And it's been a long-standing debate. There are 2 views. One is that AI is going to be complementary to existing jobs, replacing some but creating many new ones, jobs of the future. But then the other view is that over time, eventually, many jobs are going to be replaced by AI, and we're not going to have enough jobs of the future. I think that over time, the latter view is going to be the correct one. Related implication, initially, the thought was that Gen AI is going to replace mostly white-collar jobs. It's algorithm stuff that can be done by service white-collar workers. But what's happened is that in the last year or so, there has been a breakthrough. And the breakthrough is the integration between software and hardware. Because people said it's very hard to replace blue-collar jobs because, there are robots on the factory floor, but they do mechanical stuff. The big breakthrough right now is that evolution of humanoid robots that essentially follow individual workers on the factory floor, on a construction site, even a chef in a restaurant or a housekeeper.
It's terrifying. I'll say that. This is terrifying stuff.
No, but it's terrifying, but it's happening in the next literally year or 2, and that's going to be even a bigger revolution, I think, than Gen AI. And instead of having an LLM that learns about everything in the world, the entire internet follows your job or my job or anybody else's job. In a few months, then learns everything that a construction worker, factory worker, or any other service worker can do, and then can replace them. And I think that it's going to be a revolution because it's going to affect blue-collar jobs and degrees of robotics and automation like we've never, ever seen before. That's a second observation. Third observation is that people thought initially maybe low-skill or medium-skill jobs are going to be replaced by AI, but some of the advances in AI, not just the LLMs, but now the kind of like engines and thinking machines like O3, the case of OpenAI, imply knowledge and understanding at the level of a PhD. So jobs that are even PhD level or master level may be replaced. And final observation, we've seen a massive increase in income and wealth inequality and insecurity. That's a good reason why there's been this backlash against liberal democracy, democratic capitalism, and populism among the economic factors. But AI makes it worse because these technologies are capital intensive, high skill bias, and labor saving. So if you own the machine or the capital that owns the machine, you're going to do well, you'll be rich. If you're really probably in the top 5-10% distribution of skills, education, and human capital, every CEO or other people like those sorts here at Davos are going to become more productive and they're going to make more money. But if you're a low-skilled or medium-skilled, white-collar, blue-collar, increasingly your job and income is going to be threatened by AI, and there are not going to be enough jobs in the future. So I think people here at Davos emphasize the benefits in terms of cost-cutting, more revenue, more profitability. But cost-cutting means what? Eliminating jobs. And that aspect of it is going to lead to even more of a backlash and more populism that we'll see how it's going to be addressed. And that's one of the tensions, in my view, also within the great MAGA coalition of Trump. You're on one side, populist, nativist, blue-collar workers being displaced by trade, migration, but technology and innovation. And then you have the tech barons that are going to totally embrace the AI revolution. It's going to lead to even more labor shedding. And I think that conflict is already showing up in the debate, for example, about H-1B visas and migration, in which the two sides of the MAGA coalition are really at odds with each other.
What's your biggest fears on how, so let's just go zero in on these humanoids, because this is a topic I've been really digging into. Your biggest fears on the economy as humanoid robots move beyond factory floors. Maybe they're in our offices, they're in our homes, or they're trying to create companions. I look at what Elon Musk is doing with his humanoid robots. I mean, he's starting to make these potentially at scale this year.
Yeah, they'll be done at scale. They'll be very cheap, and literally even companions, boyfriends or girlfriends.
Oh, that's really terrifying. There's a lot of different places we can go with that.
Well, I met the CEO of a company who's happily married, and he says, I've tried these kind of AI bot girlfriend just to see how it works.
I do not. I don't want AI.
And he was saying, I'm getting close. This movie with Megan Fox, Subservience, came out last year, says about what happens when you hire a nanny with an AI and then eventually try to destroy you and your wife and whatever not.
Oh my God.
It's not science fiction. It's stuff that's happening right now.
I feel bad for the next generation. Nouriel, they have to deal with this crap.
Well, some people argue that our own species, sapiens, unless we merge between human and machine, we're going to become eventually obsolete. I mean, the good news is that all these innovations are going to increase potential growth, productivity growth, going to make us live healthier and longer and things of that sort. So the economic pie is going to grow a lot, but then the distribution of that pie between winners and losers, those who are left behind, those who are succeeded, is going to become very, even worse. That's the increase in inequality. There are some solutions, people, to say to that. One of them, you tax the winners and redistribute to everybody else, call it universal basic income or universal basic provision of services to everybody. The constraints are both political. Are we going to be in a system that allows that to happen? We're already in a system that's becoming quite oligarchic, in which income and wealth inequality is rising, but we're not redistributing enough. Secondly, the winners and losers are not going to be only within country, but also across countries. You might need to do global UBI, but I cannot see US taxpayers being taxed to redistribute income to sub-Saharan Africa, and that's going to create massive disturbances globally. And therefore, I think that also the nature of life, life until now has been based on the dignity of work. I work hard to provide food, shelter to me, myself, my spouses, my family. In a world of lack of scarcity, you have to rethink about what's the nature of life if it's not based on the dignity of work. And with people accept, actually, a world in which they get a welfare check because there are no jobs for them. A lot of the populist backlash is among people who say, I don't like the welfare state. I want a job, and I want a good job. I don't want to be a, unquote, unproductive member of society, and that's not acceptable to me. So there's a wide range of tensions that are going to really emerge, and they're not fully discussed here, because here is all about those are going to be the winners rather than those who are going to be left behind.
It was fascinating, Nouriel, to look on President Trump's inauguration day, and right in the front row seat, it's Apple CEO Tim Cook, Meta CEO Mark Zuckerberg, several other big tech CEOs. I think Google CEO Sundar Pichai were there. Are you concerned that this, over the next 4 years, that this is an economy that will be run and heavily influenced by billionaires?
I think it's a legitimate concern, and that goes to the tension within the MAGA coalition, because on one side you have the blue collars, and not just blue collars, but even white collars that are worried about inequality and economic insecurity. On the other side, you have not the traditional big businesses, but the big tech barons or oligarchs who have supported him, and those who have not supported him have to suck up to him. And therefore, you have this gap between the oligarchs and the new oligarchs and the tech oligarchs. And because of economies of scale, of network, actually, they're going to become even richer. Some people say those guys are going to be eventually having a net worth of $1 trillion, not of $300-400 billion.
Feels like
Elon Musk is going to go to $1 trillion.
$1 trillion net worth.
And by the way, some of it is because of true talent, but now the big game is going to be who can suck up more and sooner and faster to Trump. In a true competitive market economy system, you have a level playing field, you have a rule of law, and then whoever is more successful is going to win. But there'll be this game of, Elon Musk is close to the president. I'm at Apple, I'm at Google, I'm at Amazon, I'm at Microsoft. I can make sure that actually he's not going to be benefiting excessively, and there's not going to be nepotism and favoritism and so on. And the risk is actually the decision about policy are going to be based on who's my friend. And that's why they all showed up at the inauguration. They all offered $1 million, $2 million for the inauguration and so on. This is not how a capitalist system should be working. It's becoming, and I think on that one, Joe Biden was right in his farewell address. This is becoming an oligarchic system in which, like in Russia, you have an authoritarian leader, and then you have powerful people that are running businesses who are under direct or indirect political control of whoever is in power. And I think that's something you have to start to really worry about. But the point is, in this coalition, you have the oligarchs on one side and the most powerful and rich men of the world. And then you have what people refer to as the pitchforks. Those who are left behind, who are really angry, are starting to have guns and pitchforks. And we saw it, with the assassination of the CEO of United Healthcare and how actually online and social media, Mangione was having great amount of support, people supporting actually killing somebody else. That shows the kind of resentment that exists at the base. And that gap between these different parts of the coalition is going to become uglier. I mean, people like Steve Bannon already say we have to eliminate Elon Musk, literally.
Yeah.
So there'll be a nasty fight within the MAGA coalition.
Hang with us, Nouriel. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, welcome back to Opening Bid. We are on the road at the World Economic Forum. Like I mentioned at the top of the podcast, we're always taping this at the NASDAQ headquarters in Times Square. We have taken it on the road to the NASDAQ's home base here at the World Economic Forum in Davos, Switzerland, having a great conversation with Nouriel Roubini. If you were advising the president on trade policy and specifically tariffs, what would you tell this person who seems dead set on some form of very prohibitive tariffs on China and even Europe?
Well, I would say several things. I mean, first of all, people, of course, worry about the economic policies of Trump that will lead to lower growth and higher inflation, like trade protectionism, and you name it. But you have to give him some credit, and some of the things he's going to do may increase growth and reduce inflation, being pro-business, making those tax cuts permanent if you can finance them, deregulate an economy where it probably was over-regulation after the global financial crisis, maybe emphasizing further production of fossil fuels, even if it has negative consequences on the environment. It's going to keep price of energy low, inflation low, and reshore energy-intensive manufacturing. DOGE is not going to save you $2 trillion per year, but if you save even $200 billion, there's plenty of waste in the government. That's going to be, positive. And finally, that's a matter of just luck. There are all these industries of the future related to AI, machine learning, robotic, automation, and you name it. And they're going to grow very, very fast in the next 4 years or decade. And like the LLM that were started under Trump 1, not because of Trump, just because of an invention by Google, now all these other innovations are going to occur. And whether thanks to him or not, he's going to take credit for them. And U.S. potential growth, actually, by the end of the decade, could be as high as 3%. It's only 1.8 officially, but growth has been this year 2.8%. How we're growing faster with lower inflation? Maybe the AI benefits are already showing up. So you have to say these things are going to happen that are positive. What can go wrong, as you point out, are trade protectionist trade wars, draconian restriction to migration, unfunded tax cuts and other promises leading to higher budget deficits and higher interest rates. trying to disorderly weaken the dollar as an alternative to tariffs. It's the same thing.
We're going to have crypto. Who needs a dollar? We're going to have a crypto explosion. Nobody needs a dollar, right? No.
Well, he says on one side crypto, and he said to the BRICS, he threatened them. He said, if you're going to try to avoid using the dollar as the global reserve currency, going to impose massive tariff and sanction against them. So he wants there's a contradiction. On one side, he says, American carnage because the dollar is too strong given the global reserve currency rule of the dollar, want a weaker dollar, or we want tariffs. On the other side, he wants to maintain the dominance of the US dollar as the reserve currency. So there are lots of other contradictions, and the trade and the currency side of it actually are two parts of the same thing, because you can essentially reshore manufacturing or try to, or reduce the trade deficit either through a devaluation of the dollar or through tariffs. But tariffs, by the way, lead to a stronger dollar and actually undo what you want to do on the trade side. I would say that, you have to be really very careful. Very careful, because if you follow policies like tariffs and protectionism that cause higher inflation and lower growth, or draconian restriction to migration or deportation, or fiscal deficits are excessively that lead to overheating and to higher real rates, bond yields are going to rise because of higher inflation through trade, through migration policy, or fiscal policies. Bond yields are going to rise because, and they've been rising.
They rise almost 5% on the 10-year.
Almost 5%.
Yeah.
And that has already led to the beginning of a correction. So the point is, you can control your party, you can control Congress, you can control the courts, you can control, social media. You cannot control the bond vigilantes. And if the bond vigilantes wake up because your policies are inflationary, then bond yields go higher, the stock market corrects, and you get punished, and there is a slowdown of economic activity. And by the way, I think that he worries, being a dead guy, more about the bond market than the stock market, because the stock market corrects 10 to 20%. The wealth effect is small because most of the equities are owned by a small share of the population. While bond yields go higher, mortgages are higher, auto loans, student loans, credit cards, pretty much every form of debt. And the average American is highly indebted. So the punishment coming from the bond vigilantes may be a constraint to not doing the bad policy, because he's tempted to go all the way towards tariff and so on, all the way to trade wars. But literally, the biggest constraint to not doing stupid things is going to be market discipline, bond vigilantes. Two, the independence of the Fed. If he does things that are inflationary, the Fed may start raising rates. Three, you have to give him credit. He has chosen, at least in the economic team, as opposed to some of the other lunatics in national security, people that are actually understanding economies and markets. Scott Bessent, Steve Miran, Kevin Hassett, Howard Lutnick. These people are going to go and tell him, be careful. If you do stupid things, the bond vigilantes, the stock market vigilantes are going to punish you. Don't do the stupid things in the first place. And if he does, then the market punishment is going to lead to course correction. So those are some constraints to not doing the bad stuff.
You mentioned the Fed. I had a really good chat with Bank of America CEO Brian Moynihan. And I encourage everyone to check that interview out. It's on the Yahoo Finance World Economic Forum Davos hub. But Brian couldn't rule out a rate hike this year. I would imagine that would be because of what you're talking about, a possibly reinflated U.S. economy this year. Is a rate hike, do you think it's off the table?
No, it's not off
At least
the table.
This year.
It's not off the table. It's not the baseline. But think of it this way. Even before Trump was elected, the U.S. was not in a soft landing, was in a no landing, where growth was above potential. And while inflation was falling, it remained sticky, closer to 3% rather than 2%. And the economic policy of Trump, as I pointed out, those that lead to higher growth and lower inflation take many years. Energy policy, deregulation, it's not going to happen in 6 months. Well, the stuff that can increase inflation can happen literally this year. That is tariffs that are inflationary, draconian restriction to migration, excessive deficit that are on one side inflationary, overheating, and on the other side increase long rates because of high risk premium, because of higher debts and deficits. And therefore, those are the kind of things that you have to worry about. And the Fed is independent. Powell said,
for now,
they're not going to, for now. Well, if they try to make it less independent, actually, it damages because it means that you have an unhinging and the anchoring of inflation expectation. Bond yields are going to go even higher. That's why, he threatened to replace Powell. He's not going to do it. There were some suggestions of choosing already now and confirming the next Fed chair, having a shadow Fed chair, so the people say, don't listen to Powell, he's a lame duck, but not replace him until 26. But they're going to wait. And they're going to wait because effectively, if you fight the Fed, then the Fed can fight you. And even if you replace them, the anchor of inflation expectation means higher bond yields. But I see a collision course because since their policy at the margin are going to imply that inflation remains sticky and may go higher, the risk is the Fed that told us last year 4 cuts this year, and then in December said only 2 cuts, and now the markets are pricing maybe only 1 cut, there may be 0 cuts, and if core PCE goes higher, you cannot rule out, the way the CEO of Bank of America did, that actually this year the Fed is going to increase rates rather than even staying hold. It's not my baseline, but I think that even no cut, as opposed to raising rates, puts the Fed on a collision course with this administration, because this administration wants easy money to strengthen economic growth.
I remember a couple years ago at WEF, we caught up with you on the side of the street, and we talked a lot about, in our brief time doing that, crypto. And you reminded the world, you were really a breath of fresh air. You warned that there are a lot of bad actors in crypto, and it all came true. Now, I had a chat with Coinbase CEO Brian Armstrong here at WEF, and he thinks, obviously, as you would suspect, crypto leads to economic freedom. Do you think it will lead to economic freedom? And should investors still be concerned about what we're seeing in the crypto space? We have a Melania coin, we have a Trump coin, we have all these new coins seemingly being created around the clock. We have Bitcoin at record highs. What's the other side of the story?
Well, the other side of the story is that, first of all, these meme coins are really embarrassing. Even supporters of Trump on Twitter have said that 2 days before the inauguration, you launched something that is totally vaporware based on whatever, and reaches a peak value, 70 billion, and then Melania and whatever not. There's massive nepotism, there's massive conflict of interest. This is disgusting. Takes people, decades to become billionaires. Overnight, in terms of at the peak, actually, his wealth might have been 60 or 70 billion. But then people buy at the peak, and then it already corrected by 50%. So it's like the typical stuff. The insiders make the money, sell it at the peak to the retail web foam, and then corrects, and then they get screwed.
Yeah, they get left holding the bag. We told Anthony Scaramucci.
Yeah.
I mean, he told us here, retail investors are going to get screwed.
Yeah, and they've already been, and will gain. And you have another big bubble in crypto, and there'll be another deflation of it, and then you'll have the same cycles of people buying at the peak, then it corrects, and they sell at the bottom. They're going to lose their shirts. But that's a part of what's going to be happening. I think that the more positive things is that there are some innovation in financial technologies that actually are positive. It's not about economic freedom, but they become provision of financial services that are better. Some of the fintech has nothing to do with the way with blockchain. Some of it has to do with blockchain. So you do hope that actually the stuff that actually improves provision of financial services without creating big leverage and a bubble gradually is going to emerge. And there's here a little bit also of a global rivalry because, the Trump guys are against the central bank digital currency. They say privacy is intrusion of the government, but China is battling ahead to creating their own CBDC. The Europeans want to maintain the euro as a global reserve currency. Trump says we'll never have a CBDC. So what's the alternative? I think the alternative is going to be things along the lines of stable coins or tokenized deposits that are a private alternative to a central bank digital currency because the US has to worry about the risk of de-dollarization. We have weaponized the dollar and use it for national security and foreign policy goals, maybe rightly so, but not only the strategic rivals of the US, China, Russia, North Korea, and Iran, subject to sanctions, are worried, but even the global South is worried about secondary sanction if they don't follow the sanction. That's why the BRICS initiative about the common currency, that's a joke. It's never going to happen. But now, technologically, you have rails that allow you to bypass the US dollar and bypass SWIFT. There's a project that was started at the BIS and bridged, and they stopped it because they realized, oh my God, Russia and China can bypass it. But China is going ahead and barring ahead. So, a few years ago, Larry Summers, former Secretary of the Treasury, said people don't like the dollar, but what's the alternative? You cannot replace something with nothing. And he made a quip. He said, Europe is a museum, China is a prison, Japan is a nursing home, and Bitcoin is an experiment. Cryptocurrencies are still an experiment, and they're never going to be real currencies because they're not a unit of account, they're not a scalable means of payment, they're not a stable store of value, not a single numeraire. But now there are technological rails developed by our rivals that can gradually replace the US dollar, especially as we weaponize them. And the US is saying we don't want the e-dollar because of, government intrusion, privacy. But Europe, China, others are going to move ahead. So we have to think about an alternative. There's not going to be an e-dollar. It has to be either stable coins or tokenized deposit or something. They maintain the role of the dollar as a global reserve currency. Just threatening the BRICS and say, if you try to de-dollarize, I'm going to impose sanction on you, is not going to work. Actually, it's going to hasten the desire to replace the US dollar.
We have to leave it there. It's always a treat talking to you. We have interviewed you around the world, Nouriel Roubini. Thank you for doing this. I have to give the NASDAQ space back. They have very important meetings here. Nouriel Roubini, always nice to see you. Appreciate it.
Great being with you today.
Thank you so much. All right. We appreciate all the love on Opening Big. Continue to hit us with those thumbs up on YouTube, Spotify, Apple Music. Hit us with those likes. I personally answer a lot of your comments out there. Keep it coming. We always want to make the show better. That's it for Opening Bid at the NASDAQ from the World Economic Forum in Davos, Switzerland. We'll talk to you soon.